How to place orders correctly in Forex trading, a professional guide. Welcome back to the Professional Forex Learning Series. In our previous lesson, we discussed the top 5 reasons why most people lose money in Forex, and one of the key reasons was placing the wrong types of orders without proper planning. Today, we build on that by showing you how professional traders place their orders correctly, with precision, confidence, and full risk control. Whether you are a beginner or intermediate trader, this lesson is crucial in transforming how you approach the market. 1. Know the different types of orders. The first step to placing an order like a professional is understanding what kind of order you're using and why. Market order executes immediately at the current market price. Use it when you want instant execution and you're sure of your direction. Risk slippage, especially during high volatility. Limit order executes only at a better price than the current market value. Use it when you're waiting for price to pull back to your desired entry. Example: if your USD is 1.1000 and you want to buy at 1.0950, set a buy limit. Stop order executes when price reaches a specific level, often used to catch breakouts. Use it when you want to enter once the market proves itself. Example: your USD is 1.1000 and you want to buy if it breaks 1.1050, use a buy stop. Stop loss order closes your trade at a set loss to prevent larger damage. Always included with any trade. Take profit order closes your trade once a target is hit. It locks in profits and avoids emotional decisions. 2. Analyze before you place. Never place an order without analysis. This is like gambling. Check market direction, trend, support and resistance zones, technical indicators, fundamental events, news releases. Pushpin example: if the USD is gaining strength due to a positive interest rate report, you shouldn't place a sell order on USD pairs without serious technical backing. 3. Combine entry type with market condition. The market behaves differently depending on volatility and trend. Market condition: best order type. Trending market or stop orders. Ranging market limit orders. High volatility events: wait for confirmation or avoid placing any orders. Example: during FOMC news, never place a market order before release, you'll likely suffer slippage or a spike out. 4. Time your order with the right time frame. Timeframes determine your strategy and accuracy. Daily 4H for long-term trades, swing trading. 1H 15M ideal for short-term setups. 5M 1M used mostly by scalpers with strict risk plans. Always analyze on a higher time frame, then drop down to a lower time frame for accurate entry. 5. Attach stop loss and take profit intelligently. Don't just guess your SL or TP levels. Place SL below, above support or resistance, not too tight, not too wide. TP should reflect the risk-reward ratio, at least 1:2. Brain example: if your SL is 20 pips, your TP should be 40 pips or more. 6. Use pending orders to avoid emotional entries. Instead of sitting and watching the chart, place buy limit, sell limit to wait for retracement. Buy stop, sell stop to catch momentum. This helps avoid overtrading, revenge trading, late entries. 7. Risk management. Don't guess lot sizes. Use a position size calculator or risk 1-2% of your account per trade. Rule of thumb: if you have a $1,000 account, risking $10 to $20 per trade is enough for long-term survival. 8. Never trade without a clear reason. Always ask, why am I entering this trade? What am I risking? What confirms this trade idea? If you can't answer, don't enter. 9. Backtest your entry rules. Go through past charts and test your entry method. This helps you develop confidence and remove guesswork. Professional traders backtest everything. That's how they win consistently. 10. Journaling and reviewing each trade. After placing your order and closing the trade, record entry reason, entry and exit price, profit or loss, what went right or wrong. This builds accountability and self-discipline. Placing an order in Forex is not just a button click. It's a calculated move based on structure, confirmation, timing, and risk control. Key takeaway: greater than if your entry isn't planned, confirmed, and protected, it's not a trade, it's a gamble. In our next session, we'll look at how to use trading platforms like MetaTrader 4/5 and TradingView professionally, tools that help bring your trade ideas to life. Make sure to subscribe, hit that like button, and leave a comment below on how you plan your orders. Let's keep growing and trading smarter, not harder.
Real-life European success stories, how proper order placement changed everything. In our previous session, we learned the professional way of placing orders in Forex. But now, let's go deeper and prove that this skill, when done correctly, truly changes lives. Today, we'll look at 5 real stories from traders across Europe who achieved success, not through luck, but by learning how to place their trades precisely, using smart order types, timing, and risk control. These stories will inspire you and give you practical insight into what's possible when you trade the right way. 1. Lucas, Germany. Full-time electrician turned swing trader. Lucas was working full-time as an electrician in Berlin. He started learning Forex during the COVID lockdowns. At first, he lost money, mostly because he would rush into the market using market orders at random levels. But everything changed when he discovered limit orders and began using support and resistance zones from the daily and 4-hour charts. He says, greater than the day I started setting buy limit orders below strong zones and stop losses under real structure, I stopped guessing and started winning. His big breakthrough came trading EUR/USD in 2023, where he caught a perfect buy limit entry after a pullback, risking 1% and gaining over 7% on one swing trade. Today, Lucas trades part-time with a €25,000 funded prop firm account. 2. Elena, Spain. Former university student now full-time day trader. Elena, from Valencia, started trading while studying economics at university. She had a solid understanding of the markets, but her execution was poor. She says her turning point was when she stopped entering blindly during breakouts. Instead, she learned to use buy stop and sell stop orders with confirmation from moving averages and RSI. One major success was during the GBP news release, where she set a sell stop under support and caught a 100+ pip drop, with no emotional decision making. Now she runs a Telegram group with over 5,000 members and educates others on how to use pending orders with discipline. 3. Marco, Italy. Ex-barista who became a disciplined scalper. Marco worked in a small cafe in Milan, but always had an interest in numbers and charts. He started scalping the London session using a strategy based on short-term momentum and order blocks. His biggest mistake: overtrading and using market orders without any clear entry model. Everything shifted when he started using sell limits at the top of micro ranges and fixed lot sizes based on a strict 1% rule. Marco says, greater than the first time I planned my entry before even opening the platform, I realized trading isn't gambling, it's timing. Today, Marco makes consistent income scalping GBP, JPY and now teaches at a local Forex bootcamp in Rome. 4. Sophia, Sweden. Stay-at-home mum turned price action specialist. Sophia, a mother of 2 from Gothenburg, started trading from home as a way to earn income while raising her children. She learned to trade using price action on the 1-hour chart, focusing on structure, breakouts, and false break traps. Her biggest win was learning how to avoid fake breakouts by placing buy stop orders only after clean candle closings above structure, not just on impulse. She says, greater than when I stopped chasing price and started letting price come to me, the game changed. Sophia now runs a successful YouTube channel explaining simple order placement strategies for beginners. 5. Andre, Slovakia. Former truck driver now trading funded accounts. Andre used to spend weeks on the road across Europe as a truck driver. He studied Forex during his rest breaks and used demo accounts for over a year. His biggest struggle was placing market orders after watching YouTube videos, often too late. After getting mentorship, he learned the value of multi-timeframe analysis and placing limit orders only when structure and indicators aligned. In March 2024, he passed the FTMO challenge using only 8 trades, all of them placed using pending orders, proper stop losses, and 1-2 risk-reward setups. Now he manages 2 $50,000 funded accounts and mentors Slovak-speaking traders online. So, what do all these stories have in common? They didn't rely on guessing or emotions. They placed orders with structure, planning, and patience. They used tools like limit orders, stop orders, support zones, and proper lot sizing. Most importantly, they made fewer trades but with greater precision. You don't need to be a genius or rich to succeed in Forex, you just need the discipline to place the right order, at the right time, with the right risk. Which story inspired you the most? Let us know in the comments. Don't forget to like, subscribe, and share this video with another trader who needs this motivation. Stay tuned for our next class, where we'll dive deep into the platforms professional traders use, MT4, MT5, and TradingView.